Hi, this is Lara at Elliott Wave Stock Market with your weekly gold analysis done on Wednesday 17th of July. I'm recording this video 10 past 10 in the evening New York time, Wednesday the 17th. At the daily chart level, my wave count remains pretty much the same. I was expecting some more upwards movement. Before we saw a trend change and downwards movement, we got the upwards movement I was expecting. It was a lot slower, but it did move higher, over $4 above my first target. I think it's probably now turned, but we don't have confirmation of a short-term trend change. We'll use a price point and a channel on the hourly chart for that. The bigger picture still sees gold in a big fourth wave correction, a zigzag at cycle degree. Within that zigzag, we're in the C wave. Primary wave C is unfolding as an impulse. Within primary C, we have intermediate waves 1 and 2 now off to the left of the chart. Intermediate wave 3 is over. Intermediate wave 4 is probably not over. It's probably going to unfold as a flat combination or triangle. I could move this degree of labelling all up 1 degree and label intermediate wave 4 as a brief shallow zigzag. That certainly is possible, and that would expect downwards movement for the next week anyway, so there's no differentiation between that idea and this in terms of the expected direction for the next week. But I don't think it's over there because intermediate wave 2 was a relatively deep zigzag, and I'd expect intermediate wave 4 to show alternation in structure. If it was over here, it's a very, very brief 13 days in duration. That seems a bit brief for a fourth wave at intermediate degree. And flats, triangles and combinations are usually more time consuming. So what I think is most likely is just minor wave A within intermediate wave 4. When we know where minor B has ended, we'll use the ratio between A and C to calculate a target for this fourth wave. For now, just expect it to find resistance at the upper edge of this parallel channel. This channel is drawn first with a trend line from the low of intermediate wave 1 to this low here of intermediate wave 3, and then a parallel copy is placed up on these highs to contain all this downwards movement. Intermediate wave 4 may not move into intermediate wave 1 price territory. This wave count is still invalidated with movement above 1672.77. Its primary degree, the target remains the same at 1151. Primary C would reach at 1.618, the length of primary A. And when we know where the fourth wave within this impulse has ended, we can also calculate this target at intermediate degree. So it may widen to a small zone, or it may change in coming weeks. Let's have a look at the structure on the hourly chart, where the end of minute wave C of minor wave A up here is this point up here. So I expect it's over, although we don't have confirmation of this short-term trend change yet, and we won't get it until we see at least a full hourly candlestick below this parallel channel around the zigzag of minor A and not touching this lower trend line. At that stage, you can have some confidence that we're in a new downwards wave, probably a 3, to last about a week or so. When we see price move below 1267.60, that's the high of minute wave A within the zigzag of minor A, and you see that point on the daily chart. Movement below that price point cannot just be a fourth wave correction within an unfolding upwards impulse, and so movement below that price point confirms that this movement up is a 3 and it's over. There are some great Fibonacci ratios in here, which is absolutely typical for gold. Minute wave C is just 5.41 longer than equality with minute wave A, and within it, this third wave at minuet degree is 4.22 longer than equality with the first, and the fifth wave is just 0.71 longer than 0.618, the length of the first wave, and this is a nice ending diagonal. So with all those great ratios and this strong downwards movement here for these 2 hours, I expect it's probably over. If intermediate wave 4 is going to unfold as a flat correction, then within it, minor wave B must reach to at least 90% the length of minor A. That's achieved at 1192.45. So price movement to that or below is actually quite likely. The most common flat correction is an expanded flat, which requires minor B to be 105% the length of A and to make a new low beyond the start of A. So a new low in the next couple of weeks is actually quite likely. If price fails to reach this point, 1192.45, and completes a 3 down and then turns back up, there are another few structural possibilities for intermediate wave 4 which are a bit less likely than a flat. It may be a contracting or barrier triangle. It may also be a double zigzag or a double combination. We'll have a look at those if they show themselves to be correct. For now, the most common structure to unfold in this fourth wave position would be a flat, and the most common type of flat would be an expanded flat, which means the probability of a new low for gold in sometime over the next couple of weeks is actually pretty likely. So I'm expecting really choppy, overlapping downwards movement for another 1 or 2 weeks now for gold. That's all for me today with your gold analysis, and I hope that everybody had a most awesome week.